Hello and good morning, listeners. Welcome back to Almus Market Mornings with Jayaram Krishnamurthy, your morning brew of global financial updates. And folks, the Asian markets have started the day with some cheery note. Trump announced the Israel-Iran ceasefire, which Iran initially denied, although they also, in some cryptic format, state pausing on the ongoing attacks. On the other hand, there were also the Fed members who were seen giving dovish comments. So, JK, what do you see with such wide movements on the backdrop of these updates? What should we be expecting, and what's your take on the markets?
Good morning, Shikhar. Yes, I think right from the morning yesterday, it was getting clear that part of the market was thinking that the worst is over as far as this conflict was concerned. And there was any number of reports saying that Iran had been weakened substantially and the capacity to respond is very limited. Yes, they did respond. Uh, Later in the day, some of the US air bases in Qatar and Iraq. And that was more of a face saving exercise. And they don't want to appear like, they're taking it all lying down. But if you look at the markets, they've all been quite calm among the whole thing. And while Asian markets did fall initially yesterday, they recovered smartly, and US markets never saw a negative reaction for this. And all that culminated when the Iranian and the Qatari officials confirmed that Tehran agreed for a ceasefire, while Israel channel also reported that Prime Minister Netanyahu had agreed in conversation with Trump to a ceasefire as long as Iran stopped the attack. So there's a conditional thing, but those are things, they will not come and say that no, everything is over. They will definitely keep something, as some yes up their sleeve, but that will be only in talks. So my net conclusion is that things have de-escalated, and we had a spectacular fall in the crude price. You see, 81 plus 82 almost yesterday, Brent crude, and yet it's touched 70, which means we have fallen about 14 to 15 dollars. And erasing the rise of the last 10 days in one session is a telling commentary on the crude trend, because crude has been falling for several months. The US has been pushing for lower crude prices. There has been increase in production by the OPEC, and there's a question mark about the demand sustaining in the face of alternate sources of energy and all that. So crude, definitely it was a rise based on the event, and it has completely falling. It's that's a telling commentary on how things are. Market doesn't think. As I said yesterday, Parliament in Iran did give approval for closing the Strait of Hormuz, but final decision was not taken. I think there are mixed reports about this. There was a report saying some ships returned, but there is no confirmed report that has been closed permanently or anything like that. So market, I think in Hindi they say "Bhav Bhagwan Che." So when you see markets being calm and gold not rallying, crude falling, dollar index coming off, you really get a sense that things are like we have probably seen the worst. So that's what I'm seeing here. Of course, for the dollar to fall, we also had a trigger when another Fed member, Bowman, said that she prefers a rate cut as early as July. And because she's seeing the inflation, slowly coming off, and the impact of tariffs not seen so far. So this is following almost similar comments from Fed's Valor the day before that. And so markets have reacted very positively to that, in the sense the yields have come off across tenors, 6 to 7 basis points, and dollars promptly came off, and not even able to go beyond 99.20, and now it went below 98 again. So it's very clear which way the dollar is headed. While there have been some short periods of corrections, it's not sustaining. That's clear indication of where the dollar is headed eventually. So now all important focus for the markets would be what Powell would say, to the politicians about his stand on interest rates. Obviously, the buildup has been such that more than two Fed members have expressed their dovish view on the rates. Powell will have to really justify his stand before the politicians or before the Congress today and tomorrow. There will be searching questions about why he is holding the monetary policy, tight when the economy is already showing signs of slowing, and we have seen signs of slowing in several data. It's not slumped, but we have been seeing slowly. There's no reason for keeping the rates high until, of course, there is always a possibility that tariffs will impact. But I think that in their own language that can be transitory also. So the focus is now from the conflict to monetary policy and what Powell will say. Of course, data side, we have had the PMI initial surveys on various regions. We have had very good jump in the PMI manufacturing and services in India, and in Germany also it was quite high. Germany and UK as well. Although in Germany it remained in contraction territory, there was an improvement over the previous month. In US also, it was steady and in the expansion territory. So the sentiment for the markets was all around positive, yields lower, and then ceasefire talks, and also Fed members calling for rate cut early in July. So these was a good setup for the markets to rally, and so US markets rallied, and Asia has followed through. And the currencies wise, US dollar has slumped, as I said, below 198 once again, and then euro went up above 1.16, and even the Japanese yen, which was weakening to 147 yesterday, has come off, and it's now in mid 145s. That's a clear, Japanese yen is a clear indication. Being a low yielding currency, it's strengthening, indicates that it's reacting to lower yields and possible rate cuts in the US. EM currencies are also lower. Chinese central bank fixed the yuan central rate quite low today, almost at 7.1650, and that was almost 60 basis points lower than where it was fixed yesterday. Although Chinese yuan has not reacted much, but it's still trading towards the lower end of its recent range. As far as the rupee is concerned, we did see some weakness yesterday due to the overnight events over the weekend events of US bombing the Iranian nuclear facility. But it was not holding either the upside nor the downside. So it was held on to very narrow range between 60 and 82. But good selling was seen at higher levels. But definitely market will have to contend with a very good gap down today, because offshore is already showing 50 paisa lower from where we closed yesterday, more than 50 paisa. In fact, we closed at 86.74 yesterday, and market is closing rather now trading in offshore at 86.20 or even lower. And this is a clear reaction to the big fall in crude prices, and crude prices are one of the big factor for the Indian rupee and Indian economy. As I was saying yesterday, higher crude prices and higher dollar rupee would be the worst case scenario for India, because that raises the inflation once again. So that's now mitigated quite a bit, and so now we should look for unless there is any other negative factors. So I think rupee should again retest its lower side of the range at 85.50 or 85.80 at least. Will be a tendency for market to sell on rally towards 85, 86.40 or so. So broadly, we are in the same range, but I think with the dollar index showing once again indications of falling further, I think the rupees upside is now definitely open. Of course, we'll have to keep an eye on the flows and what RBI does. Of course, RBI, I don't think they will come and intervene at these levels. They may only come in at a lower level. So all in all, weaker dollar, stronger rupee. What we are looking at is sentiment better. De-escalation of conflict. So we're starting the day on a very positive note. Thank you.
Okay, JK. And yes, folks, indeed, we are starting the day on a very positive notes. As JK mentioned, it was a series of updates. For example, the de-escalation, which although is conditional as of now, but all the parties or all the nations involved has agreed to pause the activities on the geopolitical tension front, which has also led to a stellar correction in the crude prices. Now, folks, the crude prices, as JK mentioned, is one of the important factors for dollar rupee, and this correction has also led to USD-INR opening lower or with a cap down compared to the close yesterday. So it's a series of positive updates. Apart from that, the updates on the uh, rate cut front from the Fed members and the yields coming lower, all these have led to equities also rallying. But it's quite interesting to see that all such updates, if not de-escalation, was thoroughly anticipated, but the bit where no further escalation was also anticipated by the market participants and the financial markets in the prices yesterday. And JK, and there is a very rightly mentioned saying that Bhav Bhagwan hai. We've been observing that in the past few days. So on this note, we'll continue to suggest that we can expect some bit of correction in USD INR and a shift of range, since the de-escalation has brought down oil prices, and there are a series of updates which can also bring about flows into the nation. That's about it today, folks. We shall come back again tomorrow with another round of updates. Thank you so much for listening in.